stock markets around the world have bled. We've seen them drop more than 20%, which in technical terms is considered a bear market in stock market land. Chaos happening all across the world.
We basically have an opportunity where this is maybe COVID round 2 in terms of like the market impact. What would you have done different in COVID that you're going to do now? It's going to be favorable for you to go like risk on and take on potentially a little bit more risk than what you normally would for potentially a lot of upside. Welcome, guys, to another episode of Tapping Into Crypto with me, the delightful Ted.
Hello, Pav.
Man, how are you?
Yeah, I mean, pretty good, but this market is horrendous.
What's wrong with it?
Oh, just everything's tanked.
Yeah, look, it's pretty rare.
We're looking down the barrel of a recession. Or are we?
Maybe.
Are we?
That's what we're here to talk about. We had a, obviously, breakdown. We had a fair bit to say last week about the tariffs, but I think this week we kind of have to dive into it a little bit deeper, unpack, I think.
Yeah.
What's happened? Why has it happened? How bad is it? I think that's a pretty important one.
And then how we're playing it as well.
How we're playing it.
Are we selling? Are we buying the dip? Are we holding? Like, what are we doing? You have to wait till the end
to see. But
get those insights.
But then we'll also just talk about what's next really. Like, what are the potential scenarios from here that I think that are mainly sort of in the spotlight.
Yeah,
I think that's a pretty important one too, because unfortunately, like what we know about tariff is expect the art of the deal. Anything can happen. But let's kick off. What happened last week, Ted?
Yeah, well, let's do a bit of a recap. So on Tuesday, last episode when we recorded, we said the tariffs would be announced on Thursday when the episode came out, and we said, look, if it's announced, it's going to be sweeping tariffs, meaning every country is going to cop a tariff of some sort, and they're going to take place effective immediately. The market is likely going to tank. If there was a different outcome to that, we said, the market might perform better. But in this case, it was sweeping reciprocal tariffs across every country, and the market did tank. Like Bitcoin held steady for a little while, and then it's come down below 80K. But like even stock markets around the world have bled. We've seen them drop more than 20%, which in technical terms is considered a bear market in stock market land. So the base tariff for all the countries was 10%. So Australia copped 10%, but other countries like China, Taiwan, Vietnam, Europe, they all copped, more custom tariffs based on sort of their imports and exports. So China copped, I think, the biggest one with 34%.
And that's definitely like what it seemed like very much countries didn't say, but they were pissed off. It's like they used the word reciprocal, but it wasn't reciprocal. It was something just they pulled out of a cereal box.
Yeah. And so like it was a massive move, and obviously the market reacted to this. Pretty, could you even say it overreacted? Because it's pretty major news because it affects all the trade deals around the world.
I think if we actually like boil down to like what happened leading up to the tariff day, like we were talking about in the office as well, like Bitcoin was like, we were looking at Bitcoin most of the time. Yeah. But it was rallying. It was basically moving into the tariff deadline. So were traditional markets on the idea or notion that, hey, look, there's finally going to be clarity. This whole trade war is going to be put to bed. Mm-hmm. And I think just overwhelmingly what the reality is we're so far from. Well, we're closer to it being over, sorry. Yeah. But it's not the result everyone was expecting. It was just something very arbitrary, something that was just so aggressive. Again, we've seen this before. And I just think that just wasn't priced in. And then everyone just went, boom, I'm out.
Yeah, look, altcoins bled pretty significantly. But we might touch on that in a sec. But Pav, how bad is it really?
Yeah, I think that's what I've been trying to work out the last couple of days. Like, this obviously isn't good. Like, that's not really much of an insight. But wow. I think, wow. But I think sort of weighing up as to like how bad is it. So there's an important couple of ways to measure this. I guess what I prefer to look at is just understanding what's the market's tolerance for risk. So if we look outside of crypto just for a second, there's two main ways to, I guess, sort of understand risk in the market. So we have what's called like treasury bonds, so where people park money just with their governments, and you get like a guaranteed yield from your government. Because at the end of the day, if someone's promising you a yield, there's counterparty risk. So people during times of uncertainty obviously would rather have minimal counterparty risk. The other side of the coin is the corporate bond world. So basically where you would take your money invested in a particular industry or growth sector, and they would basically use your money to give you a higher return, But in turn, they're going to be able to like grow the business, product offering, expand to different countries, whatever. So what we basically saw was a rapid de-risking out of those higher yield products back into government treasuries. And a lot of people might have seen some headlines about the 10-year bonds falling under 4% in the US. That's like a key sign that there's just oversaturation. So
under 4% what? Yield?
Yield in the 10%. So it may seem counterintuitive, but the more people that dive into bonds, the actual yield drops. So that's kind of what happens. And when we look at the rate at which the preference for like these corporate bonds and these government bonds, so we're trying to go like risky versus not risky outside of crypto, the speed at which it moved at basically holds a candle to the exact same sort of velocity we saw during the COVID panic, inflation crisis in 22, Russia invading Ukraine, or Ukraine sort of that conflict there. And even the GFC, that's still a little bit faster in terms of how fast the market moved away from off risk. But that's what we're dealing with. We're dealing with something that isn't just a quick flash in the pan, I feel. And that's the key takeaway for me. Like, this is a big deal.
I mean, looking at like the stock market crash that we saw, it looked very similar to that of like the COVID crash when everyone sort of panicked. Difference is there, like that, rebounded super quickly when, interest rates came down to zero in the likes of Australia. Governments were pumping money into the economy to generate more, production and spending and stuff like that. This time, that's unlikely to happen, right?
Well, that's what we don't know, right? I don't want to spoil it a bit later, but I know we've definitely got some ideas on like what we think happened next, and that is a potential outcome. But yeah, the other key thing right now is like let's just zoom back and think about like the impacts of these tariffs. Like, the Trump administration said that they want to bring manufacturing back to the US and make American manufacturing great again.
Yeah.
How the hell is anyone going to have the confidence to like start investing millions, if not billions of dollars to build these factories onshore when they have no idea if these tariffs are just a game?
That's the thing. I think they're too aggressive because like you said it, if they want to bring back manufacturing and boost the US economy from within, like they can't do that from a recession standpoint. And like he's basically heading down the road of a recession. So I think this could happen. Like, I think he needs to water them down. I don't like hate the idea of tariffs in general.
I think many people have that same idea. It's not the worst idea.
Like tariffs have existed for centuries, right? It's not like he's brought out this new thing, but it's just the manner about which he's gone about it, which is super aggressive, trying to just like basically boost America up and take the other countries down, particularly the ones that are profiting off the US a lot. But in the world we live in today, which is a world of like global trade, free markets and things like that, those things are going to suffer. And I think we could have, I think this could potentially trigger a recession.
Yeah, for sure. Like, whenever you see like certain metrics, like let's say like oil is down like 21% year to date. Like, in a way, that's kind of good because they're almost seeing like a resetting of like commodities, even just like down like copper, tin, aluminium, like all of it's down, like back to like multi-year lows. Whenever the time is ready for growth, everything's cost base is technically less. So there is potentially more room for upside when we get there. But it's just like understanding like, what does the bottom of this like look like this period of time? That's, I think, the $1 million question. But yeah, I definitely think seeing things like it definitely just sent a bit of tremor down everyone's spine. Like, is, even if we do sort of stabilize in the next 6 to 12 months, what does that mean for the next, year onwards? Like, definitely recession. Like, is it still possible?
Yeah, exactly. But in the crypto world, we saw some pretty major sell-offs, and as well in the ETF. So like we saw sort of 6 or 7 days of consecutive sell-offs last week. Of the Bitcoin and ETH ETFs. Altcoins got destroyed. Solana, I want to call that one out. It's a top 5 coin. Dropped below $100, which is the first time since January 24 it's been that, so over a year. And obviously other altcoins like bled a lot, but that's because, altcoins are considered basically like one of the riskiest investments out there.
That's right.
They're going to be the first to drop, and they're going to have the most significant drop. Just like in the good times, they're going to give you the biggest returns, but it's a trade-off where it's a high risk asset. But similarly, the stock market also took a massive hit. Like we saw, I think I was looking at the NASDAQ, it was down like 8% in a day. which is one of the biggest days, one of the biggest single day drops since 1987, which holds the record for like the biggest single day drop. So yeah, absolutely chaos happening all across the world.
Yeah, just the speed of it. I think that's what's taken everyone.
Yeah,
it's just crazy.
The Japanese prime minister said he's going to fly to the US to try and negotiate tariffs with Trump.
Yeah,
because the Nikkei, which is the Japanese stock market, I think that had a drop of like 10% in a day. Like, don't quote me on these numbers, but approximately.
The general consensus, it feels like, is the US knows their market's bad, but the rest of the world's actually crumbling a lot harder.
Yeah,
which is kind of like the gross part of this all. It's just one big game.
That's it. Well, everything, stems off like the US as the biggest global economy. I know China's big there as well, but the world does the most sort of trading with the US and China, I guess. But often there is a ripple effect, just like when we saw in the 2008 GFC. There was a ripple effect that caused a recession across the world. We're seeing the same here, where like every country and every market is suffering on the back of like this decision made by Trump.
And that sort of takes us to the next point, obviously, like what's the likely outcomes from here? My general consensus, there's too many. But let's just play like, I hate to say it, but like 4D chess just for a second. Like, is there a chance here where just Trump sort of understood that everything still was potentially a little bit overheated in the global markets, and tariffs, while number one, it's going to create some sort of revenue stream. Is it a way for them to sort of basically bend everyone's arm to get what they want, to again, like to reestablish themselves for the next couple of years, like looking after themselves, right? But taking everyone else down in the process.
That's why I think that these could be watered down. Trump likes to make big, bold moves, throw his weight around. I think, like, given the sort of the outcome of this, he could, have those negotiations with key players like China, Japan, whatever, to reduce those and have a bit less of an aggressive approach. But, China's not one to really back down from anything, and they haven't in this case. And if we see a sort of trade war between the US and China, we could see a further decline in the market. So that's something we definitely don't want to see from.
Yeah, and definitely to add to that, like we just saw headlines just today, again, Tuesday morning, where there had been conversations between China and US that had degraded. And now Donald Trump's at a point where he's threatened to impose an additional 50% import tax if China doesn't withdraw its plan to respond. They were basically going to go back at them with a hike themselves on top of the 34% that had already been laid out. So if it's just this continual tit for tat, it just feels like the markets don't really turn around in a material way until the sentiment has clocked off, right? That feels like the biggest thing for me. And it's just like a case of like, well, how many countries does it take before the US gets what it wants for things to look a bit more optimistic? Like maybe China's always just like that rough one that never really quite gets what they want, but they get enough. No one's going to know what that means, I feel, until we see it. But then also, I feel like just that growth shock that we're seeing right now, like there's a big concern that the longer that this goes on for, I think the higher the chances for recession sooner than later. Like I think that's a given. Well, not a given, but, on that same point, I would say, like, you can look into, again, like we talked about those private growth sectors at the start where they have been de-risking. Central banks still globally in Europe and the US are still issuing new debt to private companies. So, if we're looking at like that movie, like The Big Short, when those sort of metrics start to fall off,
great
movie. Probably worth watching right now again.
I watched it the other night, actually. I was like, I'm ready to short the market.
I'm ready to short the market. Yes, we start to see any degradation in just the issuance of new debt. That's going to slow down growth way faster. So that's the only key concern I'm looking at from this perspective.
Yeah. And I guess from like an Australian perspective, like moving away from just crypto for the time being, how does it affect us? Australia has a massive, trade deal or like, trade relationship with China. I think 70% of our exports go to China. So we are so heavily reliant on them. And then if they, now that the US has imposed this tariff on Chinese imports and exports, the Chinese economy is going to suffer. And if the Chinese economy suffers, Australia suffers because they can't afford to, pay for our exports, right? And they're
demand drops.
Yeah, exactly. Demand for our exports drops, which means our economy drops as well. So like that's something to consider as well, like how it could, how like Australia is implicated.
Yeah, global slowdown could be gross. That's not something I want to talk about too loud right now. But I think the other real scenario right now that could potentially happen. We're seeing a rapid deflation take place. I think with the potential growth scare that's occurring, a lot of companies may be shifting and changing, going more defensive. Unemployment likely to go higher, probably faster than what people are expecting.
Yep.
It kind of opens up the door for someone like policymakers now to start easing, or at least start, taking steps to make sure that the harder landing that we're heading towards. Now, we talked about like a soft landing for so long is not as hard as, the damage that can be done. It could be like sort of reduced, hopefully, if they, for example, do some emergency cuts or some stimulus or some packages, just anything. I think that's the next key thing to watch for. The next FOMC meeting in the US, who dictate the policy rates, it's still quite a while away in the middle of May. So, there could be emergency countermeasures that come out of a result of potentially a lot of these scares that are occurring right now. But time will tell. That's the only thing I would say there.
Interesting. Like similar to what happened with the COVID crisis, right? They dropped interest rates to 0% in Australia. We saw stimulus come out to inject cash into the economy. Like, will we see that again? Because inflation is not at a stage where we need it to be, right?
So it's like
that could just kick that can down the road. Yeah. So, anything's really possible. But Pav, I want to know how you're playing this situation.
How am I playing?
With your crypto investing strategy?
Honestly, just still DCAing, Bitcoin specifically. I did take a few shorts earlier last week, but they're since long gone closed. I'm just a bit wary about trading at these sort of ranges. We're at range extremes. So they're great spots to wait for price to come to you. Just, I guess, from the way I trade. So I am looking for trading opportunities, but honestly, I'm just sitting on my hands, just doing the spot trading. I am a believer that Bitcoin dominance is still going higher. Like, it's at 63% now. 70% is not far away. Yeah. And again, if we're going to see, like, whenever we've seen an ideal phase of market growth in crypto, it's always been led by a Bitcoin rally. So if we see a Bitcoin rally, I see that's probably the best place for me to put my money first, and then look to rotate that into other assets that are going to show strength in the coming months and weeks.
Like, I actually don't know, but I'm just thinking, has Bitcoin shown strength compared to the stock markets?
Well, there was all those anecdotal bits like last week. Well, it was true, but like the stock market was falling like plus 5%, but Bitcoin was like down. I think it was like 1.7% in that first night when the news landed.
Yeah.
And I was like, oh, what's going on here? Like, is Bitcoin this fleet to value? It was like, no, like, it's just the market was just digesting and working itself
and then
out,
it came
right?
down.
And it came down
7% yesterday. Yeah. So
but
I guess from my perspective as well, I'm taking a similar sort of approach, but like pretty conservative. So like when it comes to crypto, just sort of buying the dip on Bitcoin, not really looking at any altcoins at the moment. So just keeping a sort of my focus on Bitcoin, and then also like the stock market as well. Like I have a diversified portfolio of ETFs and stocks. So just like trying to get a bit of a discount there, like I'm not planning on selling these things anytime soon, and I don't need that money anytime soon. So I'm just sort of DCAing into some of those ETFs that I was already allocated in.
Yeah. Well, I mean, it kind of rounds everything off quite nicely in a sense that I feel like what we're really potentially trying to answer from, what we're talking about, what would we be doing right now is like, we basically have an opportunity where this is maybe COVID round 2 in terms of like the market impact. Like, what would you have done different in COVID that you're going to do now? Like,
true.
Like, I think that's how I'm thinking about it. And my answer to that is like, be conservative to start, but there's going to be a tipping point where it's going to be favorable for you to go like risk on and take on potentially a little bit more risk than what you normally would for potentially a lot of upside.
Yeah.
Especially when we talk about crypto, like we've sort of talked about, so far on the risk curve on the global scale of things. So those altcoins, when they'll have their time, and I feel like, everyone that felt like they missed out, from 2022, 2023, even into 2024, kind of have like your second shot at it now.
Yeah.
I feel.
Yeah, exactly. Like, that's the thing. These times, like, everyone gets pretty fearful, but it's often presents like a really golden opportunity. That's not to say the market could head lower, because it can.
Still 100% agree.
Yeah, exactly. So, but in saying that, I actually still reckon we could hit a new Bitcoin all-time high before the end of the year. Like, we've still got...
I'll 100% pencil that in.
Yeah, we've still got 8 months left. This could, take a few months to play out before sort of a more clear future is. We can, more clear runway, I guess you could say, is mapped out. But I'm just like seeing these types of events as opportunities, especially when you have a little bit of cash on the sidelines. And this is why we say keep some cash on the sidelines for these events, and take profits at the good times. And then, those, just all the standard things that we normally say, doesn't really change the fundamentals there.
No, and I kind of like the idea of like a new high before the end of the year because the alternate's not nice. It's literally global slowdown.
Yeah.
And things aren't good for a long, long time. So I'm going to be an optimist here and hope for the same.
We love being optimistic here.
That's it.
Let's move away from tariffs for this last little segment here, and just cover some of the key stories that are happening outside of tariffs. So, first of all, Michael Saylor has not bought Bitcoin in the last week. He was initially penciled in to buy or acquire more Bitcoin as part of MicroStrategy, but they've just posted an unrealized loss in Q1 of this year of $5.9 billion. So
it's a scratch.
Yeah. So yeah, I think he's been hit pretty hard by this situation.
Yep.
So it looks like I don't know if they've postponed it or just don't have the funds right now to buy, or they're trying to just watch and see what happens. But yeah, Michael Saylor's probably he's probably sweating it a little bit. What else? CZ, former Binance CEO who was sentenced to 4 years prison, which I don't even know if he went to prison. It doesn't look like he's in prison, but he has been appointed as the strategic crypto advisor of Pakistan.
Interesting.
So it looks like Pakistan is heading down the crypto road.
Interesting. Okay.
Whereas previously, I think they had what was I don't know. Were they pro
or
crypto?
not?
Yeah.
I honestly don't know. I wonder why that is. Like, have they got low energy costs or something for mining, or
I don't know.
I don't know.
Maybe like they're going down the route of a strategic reserve and they want CZ, or maybe it's just a publicity play.
Maybe.
Who knows?
Yeah, that also could be it too.
And then lastly, we have Conor McGregor, the famous MMA fighter, UFC fighter. He launched his own crypto token called Real. Couldn't think of a worse time in the market to launch an altcoin.
Way to miss like read the room, right?
Yeah. But look, it's played out where they only raised $392,000, which was below the minimum of $1 million, and so they've basically refunded all bids.
Yep.
And called it a day.
Let's run it again.
Yeah, I'm sure they'll do it some stage when the market's a bit better. Hopefully they get some.
Whoever was advising them.
Yeah, I don't know what was going through their head, but maybe they just wanted a quick buck. But anyway, so they funded all bids and said this is not the end. So who knows? Any keep an eye for that. But I think it just goes to show that celebrity meme coins are no longer.
Yeah, if that didn't do it for you guys, I don't know what else will.
Like, yeah. Look, I'm sure at some stage they'll have a comeback, but just
they always will. Yeah,
just keep in mind, like these celebrity meme coins, they're just trying to make a quick buck overnight, and they see crypto because Donald Trump.
Yep.
He kind of paved the way for that. Not necessarily in a good way, but yeah, be very cautious of these meme coins that are pumped by celebrities.
Nice.
Shall we leave it there?
I think that's a wrap. So
cool.
Hopefully everyone out there, not faring up too badly after all this. Sort of shake yourself off, spend some time away from the charts and crypto in general, to be honest.
Dust yourself off. Get back on the horse. We've got a guest next week. So we've got Matt Williamson from Collective Shift. Yep. So he's going to share his insights. We might ask him about where he thinks the market's heading. Yeah, because he's got some real good insights. So make sure to tune in for that one.
Yeah. Thanks, guys. We'll catch you next week.
See you later.